Hello guys, good morning from this side. It's 12:51 a.m. midnight. So today I want to analyze US oil, and I did a little bit of research that I shared on the YouTube channel, and I don't know how many of you watched it. This is it right here, oil versus Nasdaq. This is a research I did, and I have to convert it into an AI research work presentation and share it with you guys. I have to do that with Notebook LM from Google, and I share that with you guys so you guys can understand how oil affects the Nasdaq and also how it affects the US stock. And yeah, so I will now be looking at US oil. So from the WhatsApp channel around January or so, and I don't know if I shared it on the YouTube channel, but a couple months ago, I think last year, I shared, okay, that was 9 months ago, I shared UK oil, which is also US oil because they are similar chart. And on the WhatsApp channel, I talked about buying US oil from this price level. We went higher, and I think I also did that on the Facebook page. So if you have not followed my new Facebook page, I would like you to follow the new Facebook page, Domitrons. This is the logo. Yeah, I only have 39 followers for now. So on the Facebook page, I talked about US oil. It's also something I shared on the WhatsApp channel right here, right? Yeah, I did share analysis right here. This is it on the 4-hour time frame. That was January 27th at the price of $60. That was when I shared US oil right here, and then it went higher for the swing high. So now we will start our analysis, and I'll tell you what I see on US oil. So I have eyes right here on this buy stop right here, and there's a news concerning the recent news concerning the US and the Iran war. All right, so we will first start off from the higher time frame so that I can explain to you guys what I see. So I'm gonna delete everything. Now if we all look at US oil right here, we can actually see that US oil has been on a ranging market, right? It's traded upwards starting from 1998, trade higher, and what it did was that it gave us a high, which is our all-time high, right? And then we traded lower, trade back up into the premium because we have this swing high and this swing low. So this is a daily range for us right here. So price trade high into the premium. If I use my Fibonacci, price from that high to this low, you can actually see what happened right here. We trade up into the premium. You can actually see reacting from the 70% Fibonacci level. We trade down to discount, and the way it has been trading, it shows a sign of weakness to go higher, right? Still respect the premium price, and then possibly traded lower to be drawn to area where we have liquidity, which is our set stop or the swing low. Now after that, we are now given a new daily range to deal with, which is this swing high right here and this swing low that we have right here. Same thing happened. We trade higher into 50%, and in that 50% we have our inefficiency resting right there, right, in which price traded into the equilibrium of our area of inefficiency, and then sold off from there and went down to our sell side liquidity. That was where we have our sweep on liquidity, and that happened during the COVID-19. You can actually see that low was formed on 2020, the year 2020, -0. All right, during the COVID-19, all of this happened. Now after that, it tells us that we are now given with a new range, which is this high and this low, and that is, we can actually see how market possibly traded higher to take that buy stop on this high and also the liquidity resting on this high. We are still inside a range. All right, so in this case we are not saying that the market is bullish or that the market is bearish, but that the market has been on a sideways, right? So that is what we have for US oil. It is on a ranging market. So whenever you see a ranging market, you can tell that is everything concerning support and resistance, and you don't have a directional bias if it is bullish trend or bearish trend. So you just in an indecision because everything is on a ranging market. All right, so I want to look at the 6 months time frame, and this is what I am looking at. When we trade higher for this buy stop, because you can actually see we have taken sell side. All right, we have taken the sell side. So where do you think the market wants to be drawn to after taking this sell side? It wants to be drawn to the buy side, and that was what the market did. It traded higher to go and take liquidity resting on this high. So now we are now having a new data range right here from this low to this high. So you can take a Fibonacci from that low, you draw it up to that high, and what you're looking at is you're looking at everything below the 50%. You're looking for an area of fair value gap and an area of order block. Now in this case we have something interesting right here, which is this area of internal range liquidity, which is our fair value gap. This was the origin of where the impulse started, and price trade for the Barca liquidity pool resting on this high. So that is just what I wanted to see on the higher time frame, including that of the 12-month time frame. Now this 12-month time frame showed me something interesting that I want to talk about, which is what we have right here, the inefficiency that we have resting right here. All right, you can actually see that price trade into that equilibrium, like trade into the sell side inefficiency, this engulfed candle, balanced it, and we went lower to sweep. All right, so every liquidity that we have resting on this low, all of them has been taken out. All right, so we bought at an area where we have a sell side liquidity pool. Liquidity has been taken, and where do you think the market wants to deliver to? That is the buy side. So we take liquidity from this side and deliver it to the opposite side of the liquidity, and that is where we're having this buy side liquidity pool, and the market was drawn to that. Now after the market took that liquidity, it is now looking for an internal range or internal liquidity where it needs to buy from, which is an area of inefficiency, or you can call a fair value gap. And that was what the market did right here, came back down to that area, and that was what we saw very clear on our 6 month time frame. All right, so the next thing that I want to do is to mark previous 12-month high and low. Now the reason why I'm doing this is so that you can have a clear understanding of the algorithm to the range. This is our 6 months time frame, this is our 3 months time frame, this is our monthly time frame. This is where we have our interest in. So the first thing I want to do is mark out that 6 months fair value gap in which price traded into, which is also the analysis that I did 9 months ago on UK oil. All right, so we are now looking at the 3 months time frame, sorry, the 1 month time frame, the monthly time frame. So this is our previous year's high, this is our previous year's low. Right, so this year being January opened at this candle, and when it opened you can actually see that all of these bearish candle are not showing any sign of momentum. It shows a sign of weakness. There is no area of inefficiency that price is likely going to sell from. every area has been closed by the wicks. So this is a sign of weakness. So the month of January opened and we trade higher. Month of February opened, and that was where I saw the analysis to buy and to target these buy stops, right? Because every high having buy stop resting on top of them, as there is no area seen to sell from. There is no sell side inefficiency to sell from. There is no bearish order block to sell from. All of that has been filled up and balanced. Now another thing is that all of these movements right here, it is not a structured movement. Like what I mean by a structured movement is higher high, higher lows, lower lows, and lower high. That is not formed. This is a range. All right, and there is no structural shift seen right here, because price trade higher, it entered a range until it trade lower to take what? Liquidity resting at an area of support level, filling up every sell side inefficiency. All right, so this, you should not consider this has a bearish structure. All right, this is not a bearish structure. As if you want to label this, will you say this is a high, low, high, low, high, low, high, and you call this a breaker structure? Then you call this a higher, low, lower, low, lower, low, lower, high. No, that is not how it is. This is a consolidating market. It's very clean and clear right there, as there is no structural shift to say you're having a bearish structure being given to you. Now we impulsively traded higher and we took out the previous year's high. All right, so now we're looking for what is responsible to take out that previous year's high. This is where it all started. This is an area of demand, and I have eyes to buy US oil from there. If there's gonna be a retracement down there, I'll be looking forward for a reaction on the 1 hour time frame to see a structural shift to start buying. All right, so also we are on the second quarter, and I'm paying attention to which quarter is going to maintain the low of the year. So January strongly hold the low, and we have our impulse, massive impulse on the first quarter of 2026, and we just started the second quarter, right? So now we will be running down to the weekly time frame, and this is what I have the weekly time frame. We have a low and we have a high. All right, so this drawdown that we have right here is not, we not consider that has a bearish market for the US oil, but I consider that has a retracement down to an area of inefficiency. All right, and that is this inefficiency I saw here. This is now the daily time frame. You can actually see very clear that this paused and it started ranging. This is not giving you a structured market like a bullish or a bearish structured market. It entered a range. So this is now the 4 hour time frame. You can actually see it very clear on the 4 hour time frame that we are on a range market. So my interest now, I'm going to delete all this black candle. My interest now is the range at which we are inside. All right, so we're inside this range high, this swing high, and this swing low. These are our external liquidity. We have the external high, we have the external low, right? So we pay attention to what happened right here with our Fibonacci. Price traded into equilibrium, and we've been ranging, we range at that equilibrium pricing together at the discount, and then price sold off from the equilibrium and trade into a deeper discount level to form what? A low. So we have this high, low, we have this swing high, we range so that we can form a swing low, and then it starts to buy to be drawn into an area of premium. Now what I have in mind is that I will be expecting it, once I've seen it buying from a discount level, I will be expecting it to be drawn to this buy stop so that it can take that liquidity. But in most cases, there are cases where it will fail to take the high and then be drawn to the swing low. Right? So if you look at the daily time frame, you can actually see it very clean and clear that it traded into equilibrium, give us a high, give us a low, trade higher, breaking this high, giving us a swing high, and we have this buy side inefficiency, which is what is responsible to push price higher and take liquidity from the high, right? So price traded back into that daily fair value gap and pushed higher one more time, but failed to go for the $119. So as we're looking at that, we will be expecting to continue buying, right? Because this right here is an area of order block or an area of demand. So we will be expecting to buy from there. But what happened? The news occurred and price destroyed that area of demand. And then it came back to the inefficiency, trading to the equilibrium of the inefficiency, right? Let me use rectangle too. So it's kind of like an inversion fair value gap of 18, right? So it violated it, retraced backwards into it, and then sold off to be drawn to the swing low. Now my interest why it was selling is that it needs to, since it failed to go for this swing high, this external high, that means external drawn to liquidity will be our external low. Now the reason why it has to go for that low is that it needs to take the liquidity resting below this low so that it can trade into that buy side inefficiency, balance it, and then we'll be looking forward to see if it wants to buy from the inefficiency and then continue going higher, or if it's going to fail and then continue going bearish. That will depend on whatever the news between the US and the Iran impact is gonna have for us. So we will be waiting for that, but this has not yet showed that it has shifted from bearish to bullish. Why? Because on the higher time frame we know that we are on a ranging market, so it is an indecision. We are now focused on what we are seeing on the daily time frame. All right, so now I will be going to the 4-hour time frame. Now this is what we'll be doing. All right, we know we are already inside this external high and external low. That is the range that we are dealing with, right? So since we have failed to take the external high and price shifted, right? So we're looking forward to it to be drawn to the liquidity resting on this low on our sell side inefficiency. And also that was why Nasdaq went bullish. So please, I would like you to go and watch that YouTube video right here. It is a very explanatory video that will help you as a trader and as an investor, so that you can understand how the market works and how most pair affect the other pair, or why other indices affect other pairs, and also commodities in the market, which is likely going to affect your investment in this US stock. So the Nasdaq still maintained its bullish move. I already predicted Nasdaq a long time ago. When was that? The beginning of April, right? So that has been delivered, and when that happened, the US oil dropped. So we're going back to US oil. We were using FXCM. All right, so back to the 4-hour time frame. Now, based on, we are seeing that the market has shifted from being drawn to the buy stop. We'll be looking for it to be drawn to the sell stop. All right, so excuse me. All right, so now what are we looking at here? This is the sell side efficiency in which price sold from. So now I have not seen any bullish shift yet, even though I have seen the price did a sweep of this low. So the same way we are looking for what is responsible to take a high or a low, it is some way that we identify what will happen when price takes out a low or a high. So we are looking for what is responsible to take this low. We have a swing high right here, resting right here. So you cannot say that price took this low, then that means we're gonna go bullish, right? this is did a hunt, yes, but you need to see a structural shift. You need to see a violation of that supply that was responsible to take that low before you look for an expectation to start buying. So you have the hunt, yes, but you have not yet shifted to give you a confirmation that it wants to go higher. So it will only go higher once I see that this high has been taken out. All right, so since that high has not yet been taken out, and the interesting thing was that it gave us an inefficiency, right? It gave us an area of inefficiency right here. So that tells me that price needs to balance that inefficiency and then sell unless it violates this high. All right, so since that has not happened, then that means I have not seen USOIL going bullish for now. So what I can see right here is that we have a hunt, we have a sweep right here, and still traded into what? The inefficiency that we have right here. We also do have a lower time frame hunt right here before it traded lower to be drawn to sell stop. Right, so now my idea is that I want want the USOIL to be drawn to sell stop, take that low, and be drawn back into the area of inefficiency that we have on our daily time frame, which is an area of discount to me. All right, I hope that is very clear to you. The reason why I say that is we tried to go higher, we failed to take the external high. Since there's a failure in taking external high and price shifted by violating that demand that is supposed to be responsible to take that high, it got violated. So that demand has been violated, then that means its next drawn will be the opposite side of the liquidity, which is the sell stop that we have right here resting on this low. On the weekly time frame, that is an area of discount, is a reasonable area of discount. So it's like saying if you are wanting to buy an asset, you'll be expecting to see sellers, right? You like to buy from who are selling. So who are the people selling? Is the people that have stop loss on this sell stop. Is the liquidity resting on that low, all right, and you have inefficiency below it. So that means there'll be buy orders, there'll be pending by orders also below this low to buy that liquidity, all right, at a discount price. So we will be watching the market. We'll see how it goes, and yeah, this rotation, that's just how what I'm expecting for it to be drawn to this low. And once it gets to the inefficiency right here, then we'll look forward to see what will also happen in the inefficiency. Okay, because we can actually see Nasdaq also is overall on a bullish market, right? So right now I am not gonna buy Nasdaq. All right, I've already predicted it at a discount level, so yeah, I'll be expecting to see if it comes down to a discount price again for me to start buying. So the only focus right here that we have is USOIL. So we'll see how it goes. See you guys next time. And yeah, based on daily range, we have previous 3 months high, and this is our previous 3 months low. So trading into the discount of the previous 3 months candle, it actually makes sense. Yeah, so I would like you guys to share your ideas on the comment section. Tell me what you think, tell me your thoughts. All right, so yeah, your comments will actually help and go a long way. Do not forget to follow my Facebook page. Is on the link, is on my YouTube link. On my YouTube right here, you have all the links to my medias, to my social handles and stuff. Yeah, when you click on the Facebook, it should take you to my Facebook page. And please watch the oil versus Nasdaq and how they affect each other. So see you guys next time. Take care and be safe.